Hey everyone, Josh Martinez here, and welcome to this week's idea. So this week's idea is the Nasdaq 100 E-mini futures. We're looking at a daily time frame, and the market is making higher highs and higher lows, and buyers are heavily in control. Now remember, this is the Nasdaq 100, so it does represent the top 100 tech-heavy stocks of the United States stock market, publicly traded stock market. And what else? It is designed to go up over time for a plethora of reasons. So one of the things that we like to do is we like to focus in on the Nasdaq, especially when we're at a lower price. Because if the market goes up over time, right, nothing's guaranteed, there's no 100%, no absolutes, but if it goes up over time, finding low prices is really like our best opportunities. So one of the things I like to do is I like to use what's called Fibonacci's. And so utilizing the one-click fibs, starting from where the trend began, which is April 7th of 2025, 3, 2, 1, click. We have 1, 2, 3 Fibonacci's have already worked out. This is Fibonacci sequence number 4. Now, according to the Fibonacci's, we do have a 618 retracement making the extension the 1.618. So the price limit is going to be 28484.00. The best place to put our stop will always be below the one boundary. So our price for the stop should be 22856.50. Now, this is considering like a buy and hold. And if you were to trade an E-mini contract, it's like 11,000 ticks above the market, which is like a 55,000 US dollar buying opportunity. Risk here is huge. It's 11,458 ticks, give or take. And then you can see that's like a $57,000 risk. So what's neat about this is because it's a daily time frame, we can understand that the bigger picture is we're in a bullish trend. And so the target of 28484.00 is very, very realistic, especially with the history of NASDAQ. Now, ultimately, again, there's no such thing as 100% absolutes or guarantees, and there's risk involved. So how do we minimize that risk? Well, we want to extract the end goal in mind, which is 11,000 ticks above the market. Then we want to go to a smaller time frame to try to lower risk. Now, how do we lower risk? We lower risk by looking at a smaller time frame, because the smaller the candlestick, the smaller the risk, the smaller the reward. The bigger the candlestick, the bigger the risk, the bigger the reward. So when we look at a 1 hour time frame, we're going to have more candlesticks, which give us more wave movements. And these wave movements will give us opportunities, good opportunities and bad opportunities. And so if we were to apply our Fibonacci sequence starting from the most recent trend, which is from January 21st, 2026, 3, 2, 1, click, we can begin to see that we have a wonderful up 1, 2 boundary. We have 1, 2 Fibonacci's have already worked. This is Fibonacci sequence number 3. Now, according to the Fibonacci sequence, we could place our stop below the 1 boundary, which is 25316. We can place our limit at the Fibonacci extension, which is price point 26614.50. So there's a 3,600 tick upside, and then there's like a 1,570 tick downside. So that is dramatically less risk than the daily time frame. So this is a fantastic opportunity, especially if we begin the U-turn. I know it's been a dramatic sell-off, and of course the one boundary could be taken out, but ultimately right now it looks really, really strong. If you want to take this down to even a smaller time frame, going to like a 5-minute time frame, drawing a downtrend line. Let me show you how that works. We'll go to like a 5-minute time frame, and then what you will do ultimately is you just say, okay, well, I'm just going to wait for this market to break a downtrend line, which it looks as if it just did already, right? Broke the downtrend line, and just have it start making higher highs and higher lows on the way up. And then what you could do is you could trade your Fibonacci starting from the 5-minute bullish trend. And according to that, we have a bullish target of 25824.50, like 473 ticks above. Now, what happens when a Fibonacci extension is hit? Well, ultimately, you know, what we're betting on is that the market moves in waves. Higher highs and higher lows, and higher highs and higher lows and higher highs. And Fibonacci's helps us understand where these short-term retracements could be and where the long-term extension targets could be as well, which is really wonderful. But ultimately, the key is stop placement with the Fibonacci sequence. You don't have to use this, but with this week's idea, this looks really, really strong. What we ended up doing is we posted the daily snapshot as an idea on TradingView. So if you do have TradingView, what you can do is You can go to tradingview.com. Go ahead and search my name, Joshua Martinez, all one word, and then you can see the latest post. We went ahead and made this public to where you can see at the time of posting this, there was 9,320 ticks of opportunity. You can see the market has already dipped since then, but it's a natural wave movement, pretty normal stuff. We outlined the stop, we outlined the target. Entry is preference. We have it written out here, and we also have it written out down here. All right, everyone, this concludes this week's idea. My name is Josh Martinez. Appreciate the opportunity, and we'll see you next time.